Good morning, everyone, and welcome to the Quantum Leap Tuesday morning, November the 19th homework session and trade level setup. My name is Doug McKay. If you're not familiar with Quantum Leap, we are a private Skype room. We've been around for about 4 years. We have a Skype chat that runs 24 hours, and then each morning we come together and do a morning pre-market analysis and trade level setups for my trade levels on the ES, and we talk about gold as well. My name is Doug McKay. If you want to check out the Quantum Leap Room, you will need a Skype account, and you can give me a contact request at Doug_McKay. I'll be the one from Windsor, Ontario, Canada. Or you can contact me directly through my email, dm@m4connects.com, or call me directly on my office line after market hours. Before we get going, we need to get the disclaimer out of the way. This information is for the purpose of educating members who want to expand their knowledge of the business of trading. It's not for trading or investment advice. You and only you are responsible for the trades or investment decisions you make. Trading futures or any instrument involves risk loss. Please consider carefully whether futures or options are appropriate to financial situation. Only risk capital should be used when trading futures or options. Investors could lose more than initial investment. Nobody at Quantum Leap is a certified trading advisor. We are retail traders operating within a self-organized learning environment. Past performance is not indicative of future results, and any trades that you see in Quantum Leap are for educational purposes only. Please trade your own plan, do your own due diligence. Okay, if you're just joining us or watching the video, you might want to skip ahead. We go through a process each morning of going through our homework sheet and just reviewing the numbers. We do this just to get us prepared for our morning session. And the homework sheet that Howard and I do, we put out what we call our Quantum Leap QLTP, which is a ladder above the previous day and a ladder below the previous day close. It's just a single sheet which has basically got all the different levels that we're looking at based on the different methodologies. This isn't a trade sheet showing you how to trade off these numbers. This is just where you're going to find confluence within different levels where you'll have different traders activating based on different methodologies. Has a little spot for the news, a little spot for working our numbers, and it's got the open highs, lows, of the day, week, month, quarter, year, and then has your Pearson pivots as well for the day, weekly, and the monthly. And we just want to take a quick view on where we are within the structure of the market. So we've got a new high that was put in at 1799.75 yesterday, so that's our year high, all-time high, week high, month high, and yesterday's day high. You can see we've been having a lot of open auction outer ranges. This is typical with a strong parabolic move. And the green indicates a higher number, red indicates a lower number. You can see we've been trending up quite well. Our initial balance continues to get higher. Our 1230 number continues to get higher. All numbers in here are in central with the market itself. I think the most important thing is that our value area continues to increase, and our value area was between 1799.25 and 1789.25 for yesterday. Looking at the news, we had employment costs at 7:30. We have Treasury Secretary Liu speaks. He's speaking right now. And then 9 o'clock we have FOMC, Dudley speaking, and then we have Evans speaking later this afternoon. So not a real big scheduled news day today. Next thing we like to do is to look at where we are in the macro to the micro trends. Monthly, you can see very strong trend. We haven't closed below the 9 EMA all year. We haven't closed below the 20 SMA in the last 2 years. We're trading above last month's distribution right now. The trend is extremely strong. You got good slope and separation on the 9 EMA and the 20 SMA. Going over to the weekly, same thing. You've got a very strong trend going on. We had that one close below the 20 all year. Which was a few weeks back now, but since then we've got a strong move up. Trend is very well intact, got good slope and separation. Going over to the daily. You can see we've created a bit of a tech gap right here on the daily. We're consolidating and coming down a bit. We should close this gap on the daily. I'm thinking we're going to close it somewhere in the area of 1784 to 1785. These gap closes are usually closed by time or price or a combination of both. This one seems to be closing by a combination of both time and price. You can see where we created this gap, came down, closed it. Every time you create a gap, what we call a technical gap, it'll come back and either get close through time, where we get horizontal development, or through price, where the price comes back and meets the action. I went back and redid my Andrews pitchfork. We've been following this long-term fork, and we finally broke out of it in the last few days. I've added this modified fork right here, on this last swing low here, and you can see we've created quite the energy point that's coming up in the near future, in around the 25th, so early next week. We've got a strong energy point in here around 1790. If you're thinking that this blow-off is completely over, I think we could get a retrace. I'm looking for a possible move to come back and test the center line here of the upward sloping fork that we put in a couple weeks ago. And if we come down and test that price, that's going to give us a test of the 9 EMA and the close of that gap as well. And that's going to be in around 1780 if it happens today. Above us, we've got the center line, a retest of the center line and the upper line of the opposing downward sloping fork. There's an energy point there up at 1799.50, which gives us a possibility of a move up to test that 1800. We missed the 1800s by one tick. I can't imagine that we're done with the 1800s. The sellers came in, the responsive sellers came in and defended that level and pushed us back down in the afternoon. We had a pretty strong move in the afternoon, but I don't think that this is the top and it's in yet. I still think that we've got some moves. We still have that energy point up at 1708 area, or sorry, 1808-09 area, and of course if we get into the 1800s, you've got the rule of 10 kicking in. So let's just take a quick look at where we are in the shorter time frames and the intraday trends. 4 hour, you can see we've closed down below both the 9 and the 20 SMA. Looks like we're getting a little bit of a rollover here. So the trend, the strong trend that we were in on the 4 hour in the last day has come back, and we're looking for a possible retracement. On the 30-minute, we rolled over yesterday afternoon, and we've been trending after this move to try to break above again. We broke below it, and we've been trending down. Now, just in the last 30 minutes, we've come back up, and we're now testing the 20 SMA from below. So the trend on the shorter time frame has been down, but now it looks like it's going to try to move up. Let's take a move over to where we are within the context of the oh crap, my charts did not save last night, so let me just do this. The overall balance that we were in before we broke out, the microcomposite VPOC is at 1758.78, but remember yesterday I was talking about where the last value was before we broke out, and if you take these last 4 days of balance before we broke out, is 1767.50. So that's my target below if we get back down here and below the 1774.75 CLV, because we'll come back into balance, and they'll be looking for buyers in the first location that they had buyers before we broke out is a 1767.50. Then I'd be looking at 64.50 and the big destination, which is the overall most accepted price in this whole balance area, even if I bring in the breakout candle, is 1758.50. In terms of the significant breakout candle, I always like to look at its center point, 50% retracement of the significant breakout candle, and that is at 1767.50. So the retracement to the 50% of the significant breakout candle is that microcomposite VPOC, or the last price where they accepted value before they broke out and put us into price discovery. Of course, we're trading much higher than that right now. We're trading around this distribution around the CHBN at 1789. Currently trading 1787.50. The line in the sand today should be this 1783.75 or the 1784 area. That's just below the overnight low, which I believe was put in at 1784.24. We'll take a look at that in a minute. We've got a double distribution from yesterday again with the CLVN at 1792.75. That was the LVN that we were trading off of yesterday as well. That was a key level for us. It will be a key level again today. And then you've got the 1796.25 CHVN above that. So between above 1783.75, other side of balance, we've got price acceptance at 1789 and 1796.25. Let's take a look at what happened overnight and move our numbers over to our intraday chart. Last night we opened up, right at 1788.50, kind of, rotated around that 1788.50, then fell down, came down and found balance in around 1786.25. So we're currently trading just above that balance. Our low for the overnight low is 84.25. So 2 ticks below the prior day range low at 84.75. Our overnight high is 1791.25. So in this it's not a real definitive LVN. I mean, the LVN for me is going to be 1790. But you've got to give this as a slush area right here. Definitely a double distribution, with the upper distribution price acceptance being 1796.50, the CHVN, the HVN from yesterday, and also the naked VPOC from yesterday, or the most accepted price or most traded price yesterday. And then in the lower distribution, the most accepted price is just below the value area low at 1789.25, in between those two naked VPOCs that we took out yesterday with that move late in the afternoon. So in terms of the VPOC overnight, 1786.25. So the overnight inventory is somewhat net short from from yesterday's close. We've got our gap close will be 1788.75, and we're going to be trading in this lower distribution. Now we still got a half hour, but if we open inside of this this destination, this lower distribution, I should say, I'd be looking for a move up to test the value area low at 1789.25 and close the gap close, and push through to test the overnight high. This is where I would expect sellers to step in and defend, get responsive sellers possibly stepping in, push us back down through yesterday's close and take us down to take out the range low from yesterday at 84.75 and the overnight low at 84.25. This area right here is going to be a trader area for me, but it's going to be a wide trade area. So I'm going to be very patient within this area because they might come up and just take out the overnight high and then reject it in around that 92.75 from yesterday. So I really have to give it up to the midpoint and the IB low from yesterday as a possible push through before they get any strong conviction to the opposing force. But if we break through here and get above that midpoint, then I'd be looking for us to come back up into the upper distribution of yesterday and come out and take out this naked VPOC at 1796 and test the value area high at 99, and of course come and test that 1800. That is going to be a trade area for me, is up here above 1800. If we get above 1800, I'm looking for a move to 1805, then 1809, and 1810. Those are my three numbers above. If we get if we get the seller stepping in and push us down through this 83.75 and take out the overnight low, I will be getting into a short on that break below that 83.75. So this area is going to be a trade area for me. In between here, I think we're going to get a lot of chop. I think we could see, a sideways development day and a rotation between this 89 and 96 and a quarter through, the testing both sides of the distribution. If we get below the 84 and a quarter, I think that the sellers will take some control and we'll get a move down to test the 1778.25 and the range high at 1779.50. The value area high for this microcomposite balance area that we just broke out of is at that 1767 and a quarter. So we've got a lot of confluence down here in this 1767.50 and 1767 and a quarter. It's the microcomposite VPOC before they took off. It's the 50% retracement of the significant breakout candle, and it's the value area high of the overall balance that we are trading around the 1758.50. So I'd be looking at this area here at 1774.75 as another trade area as a possibility to get short, or for buyers to step in and hold us above that that balance that we are in. But if we get below my main target below today, my extended target is the 1767.75. Sorry, 67.50. And then if we get above the overall trade area, my main target above is that 1708 area, with possibility of a push through to that 1810. Actually, that's not a trade area, sorry, that is a target. But again, I'm anticipating more of a rotational day. So let's take a quick look at where we've got some naked crosses. We've got a few of them that are clustered. We've got one at 1789 and a quarter. Oh, didn't mean to do that, sorry. Still playing with my new mouse without borders. A little sensitive. 1789 and a quarter. So that's right at the value area low. We've got a couple of them. We've got three of them at 1796. And one at 1782.75. One at 1781.25. And one at 85.75. We left a bunch of them for the last couple of days. 85.75 and 86 and a quarter. All right, so you've got quite a few targets below here between this 86 and 81 area. So with the overnight low there as well. So I'd say there's a good probability that we test this lower side. And again, my main hypothesis is to come up, test this 91 to 92, 93 level, see responsive buyer, seller stepping in and take us down through the lower distribution and test the low, take out the overnight low, and take out these naked crosses and possibly come down to my main target below, which is that 1778.25. That's my main hypothesis. My secondary hypothesis is that we test the lower area and the range low, buyer step in and take us up through this price rejection area and up into take out this naked cross and naked VPOC in the upper distribution and go through to the other side of the value at 1799.25, the value area high, and test the 1800s and possibly poke our nose in there with a possible move to 1805 and 1808. So taking a look at the Keltner, center line is currently at 87.75. We're trading above it right now. A test of the upper Keltner channel will bring us up to 1794. So testing just inside of that, upper distribution. Possibly you see a walk the line setup on the Keltner. Test of the lower Keltner bring us down to 81.50. Which will bring us down and take out these targets below and probably give us a push through and a walk the line down to 1778.50, which is that main, 1778 and a quarter, which is the main target below. Why that should be 25. So that's what I'm looking at. Let's take a quick look at gold. Sorry I'm taking so long, Howard. Trying to get back into the groove of things. I've been off sick for the last week. That's not my gold composite. Where's my gold composite? So we're currently still trading in this balance area around the 1283. The other side of that balance is down here at 1262.25. I'm anticipating a move back towards this 1283 in gold today with a test of the 89.60 and the other side of balance being up there at 1304, again on that test of the 1300s. But I'm anticipating, just to chop in this distribution zone with the possibility of testing to the upside. But my main target above is this 1283.80, which is current balance, and 1289.60, which is value area high, with a possible move to test the other side of balance. There actually should be a CLVN right here at this 1299.50 area, but just you can look at it as 1300 as the real test. Sorry, I'm losing my voice all of a sudden. Anyway, that's what I'm looking at. I don't know why it won't draw in there for me. There we go. And but just look for some chop. If we get through the 1762.25, the main target below is going to be this 1250 area, which was the microcomposite VPOC for when we were down in this balance, and basically down to test the swing low down here in the 1250 area. So that's everything that I'm looking at. Howard, over to you. Howard, are you there? No, there you are.
Sorry, I need to unmute myself. So thank you, Doug. So we'll take a peek at the daily chart. So one thing of note yesterday is that we had an outside candle. We had a higher high and a lower low, but we did not close below the prior day's low, so it was not a key reversal candle. We did have a bit of a dark cloud cover, so tested higher, missed 1800 by a tick, tested lower, rejected the lower level, so basically settled inside of the prior day's range. Now we do have this quarterly R2 level here, which was at 1799.75, which we hit to the tick yesterday. So from person pivots level, it did seem to provide longer term resistance right at that level. So that's pretty much my observation from yesterday. We're still well above the 9 EMA. If we do come down, 1779.25 is would be around the test of the daily 9 EMA. So let's move on to market breadth. So on the SPY yesterday, we actually did have a key reversal candle. No, not quite. Still just a bearish engulfing. Take a look at that a little closer. Yeah, not quite a key reversal. We did not close below the prior day's low, but we do definitely have a bearish engulfing on the SPY. Looking at the advanced declines, we did turn lower yesterday. These are the blue is the New York Stock Exchange advanced declines. The red is the NASDAQ. And they did come just below the break-even level of 50%. The lower chart shows the up volume versus down volume, and they also both went lower on the up-down volume, but still a touch above the break-even level. So, it'll be key to see, whether in the next several sessions these indicators continue lower. We just had a bit of a retracement on both. That would indicate continuing weakening of overall market breadth. But we still have a non-confirmation where we made a new high yesterday, but the highs of these two indicators are well below the highs put in back on October 22nd. So the market leadership is much thinner now than it was back here in late October. The leadership taking price higher is being made by fewer and fewer stocks. So as we've seen on many occasions, these early turns on the advanced declines and up-down volume give an indication that the market is weakening, and at some point could either just go into somewhat of a correction or a bit of a turn. And that's what this may be indicating now, but whether these have put in an interim lower high here, that remains to be seen over the next few sessions. But if they do continue lower, that would be make it more difficult for the market to keep rising. Okay, let's look at the sectors. So a little bit of a mixed picture. Looks like most of the sectors turned a bit lower. XLI, which is the industrials, continued a bit higher. Financials basically flat on the day yesterday. But it looks like the remainder of the sectors turned a bit lower yesterday. Retail still has a solid lead over the other sectors and has had that lead for some number of months. And we'll take a look at our on-balance volume. So on-balance volume made its high yesterday, so it is in sync with price, but not at the same magnitude of the price rise. When we made our last high here, on-balance volume did make a new high, but again, just a slightly higher high. Again, just a slightly higher high compared to price from the last high. But it is, for the most part, following price, just not as strong. Something we haven't looked at in a while, we'll take a look at our futures comparison. So the strongest future so far this year has been the Russell, followed by the NASDAQ, the ES, and the YM, bringing up the rear among the main indices that we follow. And then crude has just been in a bit of a sell-off lately. It's come down to just above where it opened the year. Bonds have been weak all year. This line here represents the break-even level where it opened the year. So bonds have been weak. Gold and silver have been weak for the year. Gold is down over 24%. Silver is down over 34%. So it's been a while since we looked at the futures, but this gives an indication that the market indices among the futures have far outpaced all these other ones that we have tracked in the past. So that's all I've got, Doug. Back over to you. About 12 minutes to open.
Thanks, Howard. This will conclude our morning homework session and trade plan setup for Tuesday, November the 19th, 2013. As always, trade well, trade safe, and we'll catch you on the flip side.